Yeah, good morning, everybody. Hopefully you're feeling as refreshed as I am. I've had to have a few coffees. It's pretty late in the week, but yeah, let's see if we can do this. Right. So the session today is pretty much talking about how we get into financing projects in Africa, right? Yeah. And essentially, let me start by introducing who I am, who I work for, and kind of the investment behind, what we do. So Willy Ireri, Executive Director, Osprey Renewables, recently launched, but we've been around for about 4 years, based in Nairobi, Kenya. We are a renewable energy focused outfit. We are funded by a group called GemCorp Capital. That was pretty much the basis for this session. GemCorp Capital are a private credit, private equity group based out of London, asset manager. They've done since 2014 about 8 billion of investments in the continent, in and around the continent. So GemCorp really are the anchor investor into Osprey. They've been in the project and in the company since 2023, and we're excited. We're very excited to get into additional investments in the continent, right? So what I'm going to do today is talk about firstly our flagship investment, and then secondly why that kind of investment makes sense, and then thirdly what other investments we're looking for in the continent, and essentially how we go about making those investment decisions, who we partner with, and kind of how we think about making good bets in the continent, right? So so first and foremost, um, with Osprey, as I said, based in Nairobi, Kenya, we've got a flagship investment, and that's a Lake Turkana wind power project in Marsabit County in Kenya. Lake Turkana is the largest wind asset in the continent, operating wind asset in the continent. It's 310 megawatts in capacity, installed capacity, has provided the country of Kenya with about 11% of the total electricity demand since 2022. So it's quite sizable. From a technical perspective, it's got great capacity factors. If you guys understand how that works, the wind speeds in that part of the country are about 11 meters per second, which is pretty much the best, some of the best in the world. And really, technically, this is a very, very good asset. Yeah. And the thread here is when we look at investments, we're looking at the technical side of things, we're looking at the operating side of things, just to make sure that we're making a good bet. Reason I'm mentioning those statistics is because that pretty much drives the revenue. It drives the business case, yeah? So at 60% capacity factor for wind farm, 11% wind speeds, that's wind blowing at a phenomenal rate, and whatever you've contracted to the utility is gonna really generate a fair bit of revenue as you invoice on a monthly, quarterly basis, yeah? So that's critical for us as investors. When you look at assets, we look at the performance, proposed performance, and pretty much what that's going to generate from an income perspective. The other aspect about this particular investment is it's in a market which has been doing independent power since 1997. So this is a country that knows how to structure this type of transactions on the offtake side. I mean, in this case, the offtaker is the Kenya Power Company Limited. So they've got a track record, is what we're trying to say here. They've got a track record. There's what, more than I would say 12 to 15 IPPs as we speak today. Lots of different investors, lots of different funders and lenders within that group of IPPs. So for us, when we looked at Turkana, we looked at the offtake and made a very quick conclusion that the reason there's more IPPs in that market is because there's predictability and certainty of payment from the existing IPPs in the market. So it was pretty much an informed bet from that perspective. Yeah. I think the other thing is and just to clarify, we invested in this project on a secondary basis. It was not a development, it was an acquisition. Yeah. But what we looked at as we made that acquisition was who are the lender groups. There's 13 lenders in this particular project. Most of them are DFIs. You've got the European Investment Bank, Africa Development Bank, Trade Development Bank, Proparco, a fair few of the well-recognized DFIs who are in that particular project. Then on the equity side, you had, again, a lot of the Scandinavian groups such as Norfund, FinFund. We even had the OEM who provided the turbines as an investor. So again, sure bet. These are groups that know what they're doing. For them to get into a transaction, they'll have done a lot of their due diligence. So not that we rode on that, we did our own work as well, but it was a compelling case, very compelling case. I think finally, environment, ESG. We looked at the project critically from ESG perspective. The ESG is actually run very, very well. There's a whole different project company that's funded by Lake Turkana itself that really does a phenomenal job in the particular county. Is very involved in community projects, does the reporting the way it should be, does take care of the health side of things, education, agriculture, transport, and just empowering the local community in a sustainable manner. So we looked at that and we saw that this was a good bet, right? So I think the thread here I'm drawing is we're in the continent looking for projects such as this, and it's important to just recognize that there's a few of those. I think the one other thing that I'll mention is risk and perception of risk. I'll say fortunately, GEMCOP, who's our anchor investor, is an emerging markets focused fund, right? And by background myself, where I'm coming from, I was actually on the lender side. I've worked for Citibank, I've worked for ABSA today, Barclays then. I've been on the consulting side, and I've been facing into the continent from the west. I was based out in the UK predominantly, and then the one thing that really struck me, even when I was on the outside looking in, was that perception of risk being very, very high, extremely high, to the extent that credit decisions were not that easy to make, right? And there was a whole balancing of risk and reward, and it was always very complex. I think in a group like GEMCOP, they cut to the chase. They're consistently in emerging markets, whether it's in Eastern Europe, whether it's in East Africa, West Africa, South Africa. So there's a familiarity with how to navigate risks so that decisions can be made on the basis of what is happening in the local scene, right? Smelling, looking at the tea leaves, drinking the same, water, as we say. So what I've found is, as investors, again, particularly in the energy sector, having a team in country on the ground will absolutely help with that. Yeah. So how we are organized is, I lead a team in Nairobi. We're based there. The structuring team is based there. We've got, today you can get any legal firm in country, any tax consultant in country. They are very familiar with risks and issues, and the approach we use as investors is make sure we've got firm boots on the ground. We can talk to the politics of the country. We can talk to the risks of the country, and make sure that we're informing the investors in terms of how it works in those local jurisdictions. So that's a critical part of our strategy as well. I think let me segue into what we're doing next, and what our appetite is. So, as Osprey, we invested in the Turkana project not just to earn a dividend, because you can do that and buy shares and stocks and actually, still make a bit of capital from that perspective. We were attracted into this investment because it's got an expansion opportunity. So the rights that we bought was a 25% shareholding in Lake Turkana. That came with the rights to a future expansion to that particular project, right? So again, the thread is as we make investments, there is some very good buys out there, but we also look at the growth curve and say, what are we going to do about this particular investment other than the day-to-day operations, maintenance, and kind of management of the asset. So the team that we have is actually spending a lot of time to really understand what that growth curve is going to be for this particular asset. And the good news is there's a huge push from green industrialization happening globally. It's very focused on some markets like East Africa, where you find there's an abundance of green energy. So there's an abundance of very good wind, very good solar, exceptional geothermal energy, and hydro, I would say, has taken a backseat because hydro has always been a legacy power source. But the exciting aspect is tapping into that abundance of green energy to catalyze green industrialization. Let me unpack that a little bit. So the interest we're seeing is there's a growth in data, for example. This is one, I would say, leading indicator. So data companies, the Microsofts of this world, Amazon, are looking for more space to put their servers. And you can see these are mega companies which have big needs. Yeah, the likes of Netflix, the likes of streaming applications are also looking for a lot of server space to put their content. The proliferation of AI is huge. It's huge. Really driving uptake of capacity. Crypto is also massive. That's I think, if anybody's been following that space and, post-elections yesterday, that's actually already booming, right? So we're getting inbounds. This is us as developers who traditionally sell to state utilities, suddenly wearing a different hat and saying, hold on a minute, my customer is suddenly not a state utility, but it's a big multinational that's looking to put their huge containerized servers, and the one thing they're looking for is low cost, green energy. That's the one thing they're looking for. And the reason that is happening is because in a lot of those markets, there's a big push from a regulatory perspective, also from a corporate perspective, to decarbonize. Yeah, you can't just keep adding stacks of servers which are, dependent on whether it's coal or thermal energy. At the same time, there's a lot of green energy out there. So the inbounds we're getting are very exciting. These are big conversations where on an average basis, the discussion is about, do you have 100 megawatts of energy at 4 cents? Some conversations are, if you follow the announcements, Microsoft announced 1 gigawatt of capacity which they want to develop in the Rift Valley in East Africa. 1 gigawatt, right? Just for context, the entire country of Kenya is running at 3 gigawatts. So not a lot, but in comparison, a gigawatt is a lot for a market like that, right? So those inbounds are very exciting to us. We're building an entire sales force to actually go to market and say, hold on a minute, we've got, in our case, this is just talking from an Osprey's perspective, we've got 400 megawatts of capacity which would like to sell to anybody who's interested. We can build that capacity adjacent to where the new demand is going to be. We can use existing transmission lines which are already in place, which have been built by the state. So there's a varied opportunity to sell this power, right? So what are we doing about that, right? So what we've done is we've actually paired up with the government of Kenya in this case. The government of Kenya is leading an initiative called the Africa Green Industrialization Initiative, AGII. And there's about 8 countries in sub-Saharan Africa that have signed up to this initiative. And what we're doing with the government of Kenya and other states is to, on a global basis, look to invite the new demand. So I talked about data. Let me talk about hydrogen as well. So that's also gaining traction. So that's potentially the new, another subset of people will be selling power to. And then, there's also the power pools. I think for those who are in South Africa, there's a fair few of there's a lot of interest in the South African power pool. In East Africa, there's a East African power pool who we can sell power to. So let me summarize. Our investment case is demand driven. That's number one. We need to identify where that demand is coming from. Number two, we look at the credit worthiness of the offtake as well. Moving away from state utilities to private big corporates, we look at their credit worthiness. Fortunately, the companies that are interested are big multinationals, so that's not an issue. Number three, partnerships is critical as well. We are looking to partner with, again, whether it's commercial banks in the region, the DFIs in the region, the international firms as well. So we don't work in isolation. We work with big corporations as well, lender groups to get to the financing. I think last but not least, from a financing perspective, I think that the topic here is, how do we make those investments? We look at that ecosystem, particular country, particular jurisdiction, particular need, the risk elements of it, make sure we are satisfied with that. We then bring in other partners, just to provide the capital requirements and really do models. So we are looking for more opportunities that kind of look and feel like what I've described on the Turkana asset, and yeah, we're really interested in doing a lot more in the continent. So I'll pause and see if there's any questions. At the end, okay, fine. So that's about our investment strategy as Osprey. So a little bit about GemCorp. So GemCorp, as for those who have just come in, is our anchor investor, based out of London, looking at projects in emerging markets, a big push in the African continent. GEMCOP does a lot of work around commodities and trading, but is also looking at investing in infrastructure deals as well, right? So if there's any particular questions on that side of it as well, happy to take them. So I'll pause and see if there's any questions. Yeah. Okay. Yeah. Yeah. All right. Yeah. Thank you. Thank you very much for your audience. Yeah.